Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 19th of August. Let's get into what markets did today. All right, canola was down $5.70 at 646. That did make a new low. Not a new low, I should say. It did push lower today, uh, a new low for the last couple of days. I digress. We'll get into that in a second. Minneapolis wheat up 1.25 cents at 587 and a half. Kansas wheat was down 675 today, 499 and a half today, down below the $5 handle on the September. Chicago wheat 498 and a half, down 4.25, also down below the $5 handle today. Beans down 7.5 cents at 1033.75. Soybean oil was up 1.5 cents at 51.80, or sorry, down 1.5 cents at 51.80, 51.81. I think that was almost 3% lower. We're going to talk a little bit about that today as well. Corn was down 3.25 today at 403.25. The Pro Farmer Tour is not helping that situation out a lot. The Canadian dollar was down 32 points at 72.13. Live cattle and feeder cattle were both up 17 cents a hundredweight on the live and $1.50 on the feeder. That did create new highs again. We're not going to show charts of those today, so that market continues to trudge higher. We've been talking about it for a while. It's going to be hard to pick up top in these markets based on the fundamentals of beef. So that market continues to trudge higher. All right, let's get back into the canola market, which I said mistakenly, I said it posted a new low. That's not necessarily true. Oops, what did I do here? Canola, there we go. We did push, though, below the 20 or the 200-day moving average. It had kind of been closing above that 200-day moving average. Even the day that it did the kind of flash crash or the China tariff news, it still closed above the 200-day moving average. Today, canola is moving below that 200-day moving average. That's not a good sign, unfortunately. The only caveat to that, I guess, is that we are still in that seasonal period where prices tend to fall. And we are seeing a couple of things I've noticed, this particularly in crush plants in Alberta, and more than one company is offering better prices for canola delivered before certain days, particularly in September. So they're looking forward to fill their crush program for September, maybe even into the beginning of October. So there are some pretty good premiums out there for cash canola, but the futures kind of suck. So there is, the elevators are needing, the crush plants are needing to create some incentive for farmers to deliver. Not only that, but you're probably in the field or looking at getting in the field to get some harvest done or preparing for harvest. So you're not thinking about marketing a whole lot at this point in time. And I think that is being reflected in the basis market at this point, but not in the futures market at this point. So that's what we're dealing with canola. Although canola's weakness today is not necessarily linked to the Chinese news. I think December bean oil had a pretty bad day today, moving to a new recent low. It hasn't been this low. We are kind of we are almost fading this gap that we saw here as a result of the EPA mandate news that happened back in June. So we're starting to fade that gap a little bit. We are kind of fading in the soybean oil market. Not exactly sure why this is happening. There's, obviously still some good demand for soybean oil, but I do think that the oncoming soybean crop is threatening to create a bit of a glut in the oil market, particularly if crush continues to ramp up. So that's a factor. I think we saw that blow off to the top. It climbed, it came back down, it climbed again, made new highs. It's coming off now. We are seeing that gap getting filled, and we'll have to see what happens with this crop. But I do think this has a lot to do with the supply, particularly of soybeans proper. And we are seeing some losses in the soybean pit today. There was an article published yesterday by Reuters, soybean oil in the biofuel area. I will link this article in the comments below because I think it's worth a good read. One of the analysts that they quote in the article is a woman named Susan Shroud, and very qualified analyst from what I've read. I subscribe to some of her stuff, and these images are not used with permission, but they were printed in the Reuters article. So you may be able to take a look at that there. Some of the highlights here, we're talking about record breaking production in soybeans for the fourth straight year, which is leading to higher ending stocks, both in absolute and relative terms to demand. So something to keep in mind. There is booming demand, powered by biofuels. Historically, soybeans were used for meal. They have high protein, and they're used for animal feed. But the expanding biofuel mandates and low carbon initiatives, soybean oil demand has surged in that, and dramatically altering the dynamics of the soybean oil market. Soybean oil share. So that would be like the calculation of how much soybean oil matters to the overall profit in a crush scenario. When a soybean gets crushed, has been rising quite considerably, and it's becoming more and more of a factor in the crush margins. So, primarily in previous years, we saw meal dictate what the crush margins were, because uh, most of the output from a soybean crush is in meal. But now, even with 18 to 20% oil, the oil is getting so valuable that it is making a difference in the crush margins, and that is creating some volatility in these markets. Kind of stepping back to canola for a second, I just want to talk a little bit about something that our premium or our newsletter subscribers get, which is access to our proprietary supply and demand tables for Canadian commodities, or commodities in general, really. Canola, we're going to do an update on canola here, because we have been doing some number crunching on what the Chinese mandate means for the S&D going forward. So we're going to we made some changes to our S&D. We're going to showcase what that is in our weekly report this week. So if that is something that interests you and you are not already a subscriber, go to canadianagmarkets.com/subscribe and hit subscribe there to get all of our publications, including our morning stuff, our ad hoc stuff, and our weekly reports, and anything else that we send out as well. We send everything to our premium subscribers. So make sure you're subscribed to that if you want to get some good some good updates on the canola supply and demand situation in Canada. To get to the subscribe, you go to canadianagmarkets.com, hit this subscribe here, and it'll take you through the process. Again, it's only $99 a month. You can cancel any time, and you get access to all our stuff. All right, getting back to soybeans here. This is November soybeans proper. We did take a dip today, as we mentioned earlier. We're down at 1033 now. Again, it's kind of consolidating in this area here now after the big rise that we saw as a result of the this is actually pre-USDA, but leading into the USDA report. Today's weakness, I think, is largely around the Pro Farmer Tour. We're going to get into that in a second here. Results in the Pro Farmer Tour are very good and are not creating an environment for bullish upside in the marketplace at this point in time. Here is December wheat. Wheat is still a concern here. We are still seeing a lot of weakness. Again, in my morning commentary today, I think I mentioned the hand-to-mouth nature of wheat markets when the market is well supplied. We're in that situation right now where, particularly at this time of year when the Northern Hemisphere harvest has come off and U.S. supplies are flush, the global supplies are flush. Buyers are looking at this as a hand-to-mouth situation, so not necessarily buying for stockpiling reasons and only buying when needed, particularly when there is lots of wheat in the world. So we're seeing lower lows in the hard red winter category. We're seeing lower lows in the soft red winter category. And even today, we did see a new low in the September or in the December spring wheat contract. So, this market remains under pressure, and it's somewhat predictable. This is a normal seasonal thing to have happen, particularly in wheat as we get into this middle of August period. It does tend to find a bottom. I'm not calling a bottom at this point, but as we get into the end of August and into the beginning of September, as the dust kind of settles on the North American harvest of wheat. All right, let's get into the Pro Farmer Tour here. I'm gonna slip here. Corn. So let's see here. Indiana crops show some tip back, aborted kernels, post-pollinating due to stress. Some areas remain dry, but others have been replenished with recent years. Yields remain uncertain versus USDA forecasts. That's the the overall test, but I think they're still seeing, very good crop conditions overall. Soybeans, d- you know, conditions were described as exceptional as well, and more consistently healthy across the tour route. Crop Scouts noted strong plant development, especially in Indiana. So the bottom line here, futures fell as the healthy crop findings reinforced expectations of large U.S. supplies. That's really what's pressuring the markets at this point in time. The Pro Farmer Tour isn't living up to its name of being pro farmer. It is continuing to communicate the same kind of rhetoric that the USDA is, which is that the crop looks exceptionally good and that we're in for a good year. Which maybe that's what we want in a crop year like this is a good yields. We probably deserve a year where we get some good yields. The downside is always lower prices when we get good yields, but it always feels better when you're filling the bins and your yield monitor is looking good. All right, that's all we have for you today. Thank you for joining us. We will see you again tomorrow.